Hey everyone, and welcome to the Bricks, Bucks, and Bytes podcast, your weekly dive into funding, market, and investor news in architecture, engineering, construction, and supply chain. Before we get started though, if you're a startup founder or operator responsible for innovation in your company, or you want a deeper, more insightful look into technology in AEC, you won't want to miss our newsletter. From deep dives into particular technologies such as AI, robotics, design, software, and so on. Hot takes from investors betting big in AEC technology and advice on building tech companies, including the stories and takeaways of the most successful AEC technology founders. Head over to www.bricks-bytes.com and sign up today to get this exclusive material straight to your inbox. And now for the episode.
Okay, guys, good afternoon. Welcome, Patrick and JP. So today with Patrick, we have a special guest, JP. I'll mispronounce it. Bowgen or Bowgen?
Bowgen.
So JP is principal at Camber Creek, venture capital and private equity firm from Washington, but located in Zurich, I think, for the last 10 years. Yes.
Last 3 years. Originally from New York City, but
Okay.
Zurich for the last 3.
Okay, so today we'll have interesting subject to discuss, which is what's been happening in Germany and the Fiscal Bazooka, how they call it over there. But maybe before we dive into this, JP, can you tell us a little bit about you and Camber Creek? What you invested? I've read that you guys have $1 billion of assets under management. That sounds big.
Yeah, that's right. I mean, if you can believe it, Camber Creek was founded in 2011 when for the entirety of that year, there was only about $50 million of VC capital poured into the prop tech sector. So we've actually been around for about a decade and a half, and we do manage just north of $1 billion across a family of 7 different venture capital and private equity funds. Our strategy is fairly simple, is we just try to add an exceptional amount of value to the founders that we work with. And what that looks like in practice is every time we raise a VC fund, we raise it from a massive network of more than 300 real estate and construction companies. So those companies that are invested in our funds, that's really the growth engine behind some of our most successful companies in the portfolio. And the reason I'm here in Zurich is we want to be working with the best founders wherever they are. So part of my job is not only sourcing and doing deals, but trying to work with real estate and construction companies in this part of the world that are excited about adopting tech. And we're at a really exciting point in that trajectory. And this headline is just hopefully the tip of the iceberg for what should be a fruitful conversation.
Good. Have you guys crossed your investment paths in terms of investing in the same startup, you and Patrick?
We tried to a few weeks ago. I don't think that one landed, but we're constantly looking for deals to do together. I think our firms work very well together.
We'll get there. And JP, is perhaps not something that you are comfortable sharing, but I'm very, very comfortable saying it. What you guys have one of the most impressive investment strategies. I feel like you're much more concentrated, much more high conviction than most investors that would invest at your stages, which I think it would still be considered early stage when you invest, right? So A's, B's, right?
Yeah, we're doing about 70% of our deals with the Series A, and I guess, Patrick, what you're getting to there is we only invest in about 10 to 15 companies per fund. So in the 15 years we've been around, we've invested in less than 50 startups collectively. Part of the reason that we do that is, I think Fundamental does something similar, is we really value the on-the-ground feedback of the value a technology provides to a real estate or construction company. So we try to make a number of introductions between our investors and startups that we're excited about to collect that feedback. And the stronger that market signal, the stronger that on-the-ground feedback actually is, the more conviction in theory we have in potentially putting capital to work and making a direct investment. But as you know, people are busy. So when you're trying to make five introductions between startup and real estate company, we can't always move quickly. And so we do a lot of our deals off cycle, candidly. And we find a lot of value in adding value to our founders, and our ability to do so actually helps us get into some really interesting companies at some pretty favorable marks.
Mm-hmm. I've seen it happen. I mean, you've even helped some of my portfolio companies without being invested because you're investing the time to not just build the relationship, but also to maximize your conviction because of your strategy. I've really appreciated that over the years, and it makes, for me, collaboration so much easier because it doesn't become transactional then. It doesn't become opportunistic. It actually becomes very, very thoughtful, and I've enjoyed that a lot. So Martin, to your question, we have crossed paths. We haven't crossed on investment yet, but to get an investment from JP is very, very difficult.
Yeah, I can see that. So just touching on this maybe very briefly, what is maximizing the conviction? What does it mean really? Is it that you only invest in a few, but if you invest, then you are very convinced that this is the right one? And how so?
Yeah, that's exactly right. So we have a process that we refer to internally called our beta lab, actually. And so the beta lab is where we've run a substantial amount of our due diligence. We've taken a look at the financials, we've mapped the competitive landscape, we've done the TAM analysis, and we're excited enough about the startup where we want to make introductions for that startup to our investors. That's where our beta lab officially kicks off. So in practice, what that looks like is we're making these introductions and we're collecting the feedback from those introductions. Sometimes we might be on the call directly with the founder. Other times we collect the feedback post the call with the introduction or the person that we introduced the founder to. And really the strength of that feedback helps us ultimately get to conviction and potentially submit a term sheet or, take a following position or what have you. So it's that is our process sort of end to end. And really that beta lab is the crux of how we get to a point where we're excited to support founder.
Mm-hmm. Got it. Okay. So let's dive into this one then. So today's subject is what we've got here on the screen. So German recently did a fiscal U-turn and they announced 500 billion infrastructure fund and unlimited, I think, military fund or something along these lines. Which what does it mean really for Europe, for economy, and for folks living in the EU really. So guys, over to you.
Obviously, we have two different upbringings here. JP, you hail from the United States. I was born and raised in Germany, but we spent time in each other's countries for a good amount of time. So I think it's going to be an interesting sort of exchange of perspectives. JP, before we launch off, let me just contextualize it a little bit because I think history is important and instructive here. Let's go back to World War II. Germany, the Third Reich, basically, World War II got, done. Luckily, I'm very fortunate to live in a free country because that happened, and the Allied forces freed and liberated Germany. As part of that, Germany was not supposed to have a strong army, strong defense, but the Marshall Plan kicked in. So with the help of the Western allies, Germany was very, very quickly rebuilt into a manufacturing center, lots of infrastructure, etc., which kicked off, for example, an era of very, very strong economic growth and prosperity in the 60s, powered by its manufacturing base, etc. And so that led to Germany becoming the third largest economy in the world. I think today it's the fourth largest economy in the world. And it's bigger, by the way, just for the listeners, there is not a single state in the United States, including Texas, that is bigger than Germany. The German economy is bigger than any of the, 50? Yeah, 50 states. I think they're trying to add a state here, but let's not get into that. But bigger than any of these, right? And so over time, Germany had invested about 5% of its GDP into defense up until 1990, the end of what people considered the end of the Cold War. I guess that can be debated as well. And so then, like many, many countries, including the United States, by the way, the defense as a percentage of GDP basically plummeted over the last 35 years. Interesting piece, by the way, Ferguson's Law was first violated in the United States, JP. I don't know if you noticed. The debt spending per GDP, the interest debt spending per GDP is now for the first time since World War II higher than the defense spending per GDP in the United States. And that happened in many, many countries, including Germany. So Germany ramped down defense spending after 1990. It invested a lot in infrastructure in the 1990s because of the German reunification, developing East Germany, etc. And then for the last 20 years, Germany basically didn't invest a lot, neither in defense nor in infrastructure. Also because one thing happened in 2008, the great financial crash. Europe was not caught as strongly as the United States in the wake of the great financial crash, but there were European countries that were over-leveraged. Greece was famously one of them, Italy, Portugal, etc. Germany was much stronger, being the third largest economy at the time in the world. It did have a balance sheet, so to speak, that was much better. Even to this day, Germany is much less leveraged than many other economies. It's about 62% debt to GDP, which is not the right metric to look at. But sorry, you notice I'm an economist, but that's not the right metric to look at. But anyway, that's what people do. And so it's actually got a better balance sheet. And because it had that strength, it also led under Angela Merkel at the time.
Hey listeners, I want to take a quick break to remind you about the Bricks and Bytes newsletter. If you're interested in learning about the technology shaping the future of construction, you won't want to miss the valuable insights we share each week. To get this exclusive content delivered straight to your inbox, head over to www.bricks-bytes.com and sign up today. Link is in the show notes. Back to the show.
The deleveraging and the fiscal discipline across Europe in order to make Europe come out strong again after the great financial crash. And Germany didn't only make friends in Europe at the time, but, I think together as a European community, the markets recovered more quickly than the United States markets. And there was fiscal discipline introduced as a result of that. And that's important for the context today, because one of the instruments that was introduced is the so-called debt brake. So Germany, as well as the EU, has its own mechanism, has a debt brake that does not allow the German government to take more than a very, very small percentage of its GDP as new debt every year. That puts a limit on what every government in Germany can actually do in terms of infrastructure spending or excess defense spending. You have to stay within the budget. That's different than in the US, JP, where basically every 6 months you have to go to Congress and ask for, hey, by the way, we're going to run out of money. So guys, please make sure we're staying funded. So in Germany, it works the other way around. In Germany, you have to stay within the budget as part of this debt brake in the first place, and you don't have a lot of room to maneuver unless you find a 2/3 majority in the parliament to basically delay or cancel the debt brake, which to this day has not happened. And now Friedrich Merz and the new, supposedly, he's the chancellor-elect, coalition comes into play together with two parties from the middle and center, that are going to form the government here, the way it looks, and they are going to introduce three things. One, they're going to introduce I think 300 billion defense fund, SPV. Two, they're going to introduce it sounds like 500 billion, but it's still yet to be confirmed, 500 billion infrastructure spending SPV for power grid infrastructure, pipeline infrastructure, railway, tunnels, transportation, as well as power plants infrastructure, I guess telecommunications perhaps as well. And the third thing that they are going to propose next week in the parliament is actually getting rid of the debt brake. Because the new parliament isn't formed yet, the current parliament would have the necessary 2/3 majority together, the two supposed government parties together with the Green Party. That's something that they are also going to do. And that is called the Fiscal Bazooka. It sounds like it is going to happen. And of course, for all of us in construction tech, JP, over to you, that could be a massive era of dynamism and optimism in Europe that we haven't had for a long time. And that's why I gave this context.
Yeah. I mean, I think, Patrick, to your point, it's kind of interesting that the angles that we're coming at this with. I think, just speaking purely as an American, the last 35 days have been absolutely chaotic. And I think the world is sort of looking for someone to step up and kind of take the lead on, building, not necessarily with the reliance of again, the US. And I have the fortune or misfortune of reading Twitter and LinkedIn and all these posts about, it's time for Europe to set aside and, forge our own path. And I really think this is a jolt. Like, this is that opportunity. I think there's going to be a lot of innovation that comes from this. And I think, sitting where I'm sitting, we as a fund, or at least I can speak personally, are really excited about the tech that could come out of this next 4 years.
Question, where is the money going to come from? Is it going to be pure printing, or is it going to be... because on one hand, you can see, you might see there is some productivity growth because there's money slashing here and there and people will use it to do good things. But on the other hand, for normal folks, it depends where the money is going to come from. It might not be as colorful. So in my head, there's this one side of startups, perhaps potential new startups coming out of this. But on the other hand, is it going to be better for folks living in Germany in terms of inflation, perhaps? Any thoughts on this?
So I think the inflation effect will not be particularly pronounced the same way it was after COVID response, for the simple reason that this is not directly going into consumer spending, but this is going into hard assets. And typically, again, this is the economist speaking in me, typically when you raise debt in order to invest it into infrastructure, hard assets like defense, it's a more indirect effect to inflation. I do expect it to actually manipulate inflation a little bit or influence inflation a little bit, but it won't be the same effect that you would have after the COVID response. But yeah, it's to your question, it's going to come from raising debt.
Mm-hmm. Okay. So is there anything similar happening in Europe, or is it just Germany singularly saying that we are increasing the spending because of probably geopolitical reasons?
Patrick, I don't know. I did a little bit of research on this earlier, if there were any like programs in any other continental European countries, and the only one that I could come up with is it seems like the Netherlands is trying to maybe not replicate, but introduce its own jolt of energy to its economy. I have to say, I think the estimate was that they're trying to propose about a $500 billion budget, but only something like a billion of that was going to be allocated to at least the world that you and I play in contact. I was encouraged to see that as part of that budget, one of the kind of the mandates out of the Netherlands was that they want to focus on the housing shortage, and that over the next however many years, they plan to build about 100,000 homes in the Netherlands. But it's a fraction of the budget they proposed, and so seeing this again, I think it's fairly unique for its time. Mm-hmm. Would you agree?
I would absolutely agree. I can't see right now another government in Europe doing something similar, but Europe as a whole is actually preparing something to complement it, to flank it, to stay in the military bazooka lingo. So the European Union is actually going to propose, as it looks, several hundreds of billion of debt stimulus to allow all the countries that are participating in the EU 28 currently spend more on defense. Again, the EU has its own instrument that is, you don't call it a debt break, but in the end, it limits how much debt you can really take. And so they are going to actually remove that for the defense spending, which will lead to a potential stimulus of another a couple hundred billion here. So overall, we are seeing that. I think France, I would expect them to have these conversations as well, but the government situation in France is a little bit more, they are later in the election cycle. Germany just got elected. They are needing to find the political will internally, I think. So here we'll have to see. Denmark, I think, is also very, very politically willed to spend on defense and probably by extension also infrastructure. So overall, what I've been noticing, especially in Germany, Martin, the last few days, but also preceding to the election, it was actually a lot of optimism. And I want to give you a data point. Mm-hmm. Building materials companies that are publicly listed and serving the German market basically made a 20% jump the last few days in share prices. Mm-hmm. That's the effect of things like that.
Same, I think, military companies, right? I heard that.
Yeah, if you bought Rheinmetall 2 years ago, you're doing fine.
Mm-hmm. But to push it back a little bit, a few weeks ago we mentioned Ray Dalio's book, Why Countries Go Broke. Is it on how it starts?
You're talking about the big debt cycle?
Yes, you adding debt because you start spending on infrastructure, military, and then things go wrong because you can't pay it back.
It's certainly not going to prolong the long debt cycle for Germany. Yeah, that I think would be hard to debate and hard to argue.
Yeah.
But on the other hand, look, I mean, it's what's required. I posted today on LinkedIn. JP, I would actually be really, really interested on how you perceive this. So I posted today on LinkedIn my perception of how you win European customers as a construction tech company, right? Okay, great. And so one of the things that I keep saying about how European executives, whatever policymakers make decisions is they take this annoyingly long time to move on obvious things that should be obvious to move. And then you're like, holy fuck, guys, why are you not moving? And then there is the drop that brings the bucket to overflow. And then all of a sudden, then they are very, very forceful about it. And we've had certainly that moment in the last 2 months in Europe, didn't we, JP?
Yeah. It's, I think I can speak to what I know here, and having just been in Switzerland for 3 years, there is definitely a different way to sell into construction in the US than there is in Germany. And I think the challenge that we've seen, especially with some of, I'll say our companies that have contemplated coming to Germany as their next big market, is, the big vision of, technology as the next frontier, AI as the next frontier, whatever the thing is of the next frontier, that doesn't sell very well in Germany. Like, you really need to get down to brass tacks. And like, we really coach our founders to get their ROI story very, very firm. A, how are you going to expand my top line? B, how are you going to expand my bottom line? Dollars and cents sell. And I think Germany is a really good market for testing that thesis. So when we've had our companies come over to Germany, like, we really need to tighten up that sales pitch, because to your point, Patrick, I like the way you put it. Germany thinks more like engineers. They don't think more like salespeople. They don't think like salespeople.
Which is good, I guess. So do you guys see your funds investing more in Germany now, or in Europe broadly, than elsewhere?
I mean, we would like to. Going back to what I said at the top of the hour, our thesis is one where we want to drive value for our founders, and I would argue that there are too many funds out there that say they can drive value that don't actually drive value. And because our thesis is one where we drive that value through this LP that sits behind our fund, we want to work with great groups in Germany that are excited about adopting technology. So the short answer to your question is we hope so. But I think the fascinating statistic that I've seen in recent memory is for every dollar that's invested in a European startup, there's $5 invested in an American startup. And I think a program like this that Germany is instituting is really just the first, to use the jargon that Patrick mentioned, is the drop in the bucket that causes it to spill over. I think we're going to start seeing a lot of influx of both VC capital and private capital coming into Germany, because this is Germany putting its money where its mouth is. Like, we are investing in infrastructure, we're investing in defense. And if I were a contact founder right now, and I'm not, and I don't live and breathe that day to day, so pardon any ignorance, I would put on my running shoes and start pounding on every door of every construction company out there, because the story now is no longer how can I make your business better? It's how can I differentiate your offering so you win some of these contracts and generate outsized value from our technology.
Mm-hmm. JP, who was it in American history who came up with a trickle down economics? That was before Reagan, right?
You're gotta take me back to like 8th grade history. Oh boy,
who was that? But it was someone. It was a president, right?
Yeah, it was exactly.
Anyway, so I've always struggled with trickle down. Again, economics talking, blah 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 blah. I always think of it like a flywheel. So the thing that happens when a stimulus package like this happens is, JP, to your point, all of a sudden the capital allocators pay attention, right? And of course, the capital allocators still have reasons to criticize Germany to do other things, unbureaucratize. That's another thing that the Merz government will have to do. He seems very committed. There seems to be the political will across the political spectrum to actually do that, even on a EU level, if you're paying attention. Okay, so now capital allocators might get their will. So that's great for JP, for me, for the BlackRocks of this world, etc. Now, when that happens and actually capital flows in, what does happen? Well, the customers pay attention. Now, I mentioned the share prices of building materials companies in Germany. They came up like 20% the last 2 days. And by the way, they had already been on a rally. I forgot to mention that, for at least a year, because in anticipation of these moves. So now these customers feel optimism. After 2 years of holy fuck, what are we doing? And this and that, and we're stuck here, and etc. That has flipped overnight. So now you have this flywheel effect where the potential customers and business partners of the context startups and founders feel optimistic too. They feel more decisive too. So who takes notice next? It's the founders. It's the people that JP and I speak to, or don't speak to, that pay attention, that have great businesses. JP, I'm currently, sorry, I'm not giving you the name, but because I want to win that deal, brother. But you can do the deal after me. It's an amazing founder team in the United States doing great business. It's a SaaS company doing great business in the United States, profitable, by the way. It's one of the few SaaS companies I ever saw out of the United States at that stage that managed to be profitable. What did the guy do? Win the first 2 European customers, right? So now he's looking into, hey, how can I grow my business in Europe better? Not because I'm replacing the US. The guy has strong ambitions for the US, but he just feels like, hey, I know how to roll that out now. I know how to control this, but I see this big opportunity of optimism over the pond that I want to tap into. And I think that's what's happening, right? And so this is the flywheel effect. It's not trickle down, it's a flywheel. And so now the capital allocators will take note. So this could potentially go on for a few years now.
So in 2020, 21, there was a lot of different type of stimulus, probably, and there was lots of, we talked about it a lot of times that plenty of companies emerge without substance. So how do we know that it's not going to be similar in this case, where there will be more capital coming into Germany, and more and more free money, and startups might not be of that substance? Any thoughts here?
Well, I mean, I guess the short answer is that I don't think we do. Part of our job as capital allocators is figuring out what's real and what's smoke. But I think the environment in Germany right now is such that, look, if I speak to what I know, if you are a general contractor, aside from being particularly adept at a certain specialty trade or a certain, piece of your business, maybe you do more wastewater, or maybe you do more commercial real estate, or maybe you do more multifamily. Really, the differentiation between general contractor A and general contractor B, really boils down to what are the economics that the project is going to run me, and how is it going to impact my profitability in working with you versus your peer. We are at a time in Germany, or at least it's my opinion, we're at a time in Germany where technology now has outsized value to prove not only can the technology expand top and bottom line, but it can help a general contractor or a contractor differentiate their offerings sufficiently enough to hopefully win more deals. That is a thesis that we are underwriting against at this very moment, because with this huge stimulus, there is a great opportunity. Again, founders should have their running shoes on and going out and knocking on the doors of every contractor they know. And the pitch is not the big vision. The pitch is, how am I going to help you win some of this pie? And how can my technology help you beat out your peer and, getting contract A, B, and C? I think it's a very exciting time to see if the technology that Germany has built up until this point has metal. And I think it does, because part of the, Patrick knows this, we talk about it all the time. Part of the frustration that I have is that there's so much amazing technology in Germany, but we're almost behind the boat in terms of raising our fund from amazing German companies to support these founders, not only in terms of crushing it in Germany, but coming potentially stateside or to the UK or to France or to another market. The tech and construction in Germany is top notch. Now I kind of view this stimulus as the market is catching up and ready to adopt it.
That would be pretty cool. And I mean, Martin, you and I, we have so many cool discussions behind the scenes about that. I'm with you in that camp, right? So it's got to be about substance. And yes, liquidity typically creates a higher share of froth in any kind of market. However, I would say construction is still construction tech, right? The thing we all love here, it's still so underinvested that the amount of froth that you're getting is nowhere near compared to what, other segments of VC, etc. So will we increase that share? Potentially, but it's so underinvested, man. And then come on, Martin, Germans. Do you really think Germans will be,
I hope not. Yeah.
Would you believe me if I made a prediction and said I think we'll see the first German contact unicorn over the next 4 years?
We definitely,
as a result of this stimulus.
As you said that, we definitely check you on that.
I would say it might be quicker, but then I would be a little bit liberal with the definition of contact.
So why would that be? You would mix PropTech or how would you do?
Yeah, or renovation, energetic upgrading. These are categories that are already a bit more mature. That's why I was saying that. But if we go pure contact, then 4 years that's bullish.
Mm-hmm. You're saying because one of your portfolio is going towards unicorn?
Maybe
Renovation.
an update for the next one.
Good. So Speaking of like areas of construction or perhaps prop tech as well, where we might see the largest growth in terms of number of substantial startups. So you, Patrick, mentioned that material producers went up 20%. So I guess that's one of the areas which will be or is already quite heavily impacted by this news. What are other areas you guys think that will do very, very well and should do very, very well because of this?
I can start. Sorry, I just want to make one quick comment before I answer the question, Martin. Hey, JP, actually, Germany already has a construction tech unicorn. That's RIB Software.
Oh, man, I should thank you for checking me. I did a bunch of research on this today. Which one?
No, but look, it was. I don't think they ever raised VC money. That's why perhaps the term unicorn might not be as applicable. But I think Schneider bought them for 1.2 billion, and they were the default ERP software for construction in several construction segments. Actually,
what's the name?
RIB.
RIB. Okay.
Software. Yeah. So in a way, yeah. But back to your question, Martin. So. Look, we can obviously do a top-down exercise here, but I remain extremely bullish on on-site robotics. I do remain bullish on supply chain solutions and actually finding ways to now ramp up the availability of materials as well as the affordability of materials. The last time we had that problem was 2020, 2021, and it could get back to that state if you're now really ramping that quickly, which we'll have to see how quickly it truly ramps. Power grid reconstruction. I made an investment in November in that space, and I'm firmly bullish on that one. And then energetic upgrading. I think that is one that people think that Europe invests in energetic upgrading of its building stock because of ESG. That's the wrong impression. Actually, and yes, there was a EU taxonomy as a stimulus, but that's not why Europe invests in it. Europe invests in it because it's not a geography that has, except for Norway, Romania, some other smaller parts, it doesn't have a lot of prime resources for energy conversion. And so Europe actually needs to become more efficient with its energy use in order to maintain the position that it desires to have on the world stage. And buildings, JP, how much are buildings again in power consumption?
Huge.
40%?
Yeah, exactly.
Or greenhouse gas emissions, I think is 40%, something like that. So look, I mean, if you want to save energy and free up the energy that is there for manufacturing, you start with buildings. That's where they're investing.
So JP, you have unique view on the prop tech space. Like which areas would you say will have the greatest impact, or what type of startups?
Yeah, well, so I concur with Patrick on the material side of things. I think it's, we've spent a lot of time in green concrete, green cement. I think we're starting to see a pretty solid influx of like new age timber startups coming to market. But again, the phenomenon that we've seen, at least with the real estate groups that we've worked with, maybe not necessarily the construction groups, is that there kind of needs to be the first domino to fall before the rest of the market ultimately takes up this cutting edge technology. And so we've seen a lot of promising signaling around, cement company A is building a gigafactory or whatever the jargon is. I apologize, to really take their product to market more meaningfully, but they're still looking for that first user to really implement their technology meaningfully across their portfolio. I think in the case of this stimulus, investment in infrastructure, we've seen a few companies that are actually building greener, healthier cement for infrastructure specifically. Like I would love to see Germany spend some time and think about what is a very low hanging fruit use case where we could put in some green cement to, strengthen or stabilize a bridge or strengthen or stabilize a highway. I think that would give a lot of credence to the category because we've seen a bunch of VC dollars poured into next generation materials startups and very little to show for it at this point. I think actually, Patrick, one of the ones you have in your portfolio is doing really well. But that is a very, I can't say many of them are doing as well as the one you have. But I think the stimulus does provide some pretty nice runway to start testing with these next generation materials, particularly in the infrastructure segment.
I agree. Funnily, actually, to that point, and sort of a proof point, some of the newer material startups that we have out of Europe actually make very good business with Ukraine, with the reconstruction of bridges and infrastructure in the western part of Ukraine already. So all it takes is dynamism, in a sense, and optimism, and a need, right? And so when we keep things stale and stable, and we're all kind of satisfied, it's harder to do.
Mm-hmm. Patrick, can I actually ask you a question? Because you have a really good purview on this within your portfolios. Do you feel that the mandate for spending in infrastructure and defense takes away from the theme that we've seen over the last several years, that being revitalizing Germany's housing stock? Like, the reason I ask that is because it's such a big piece of the construction market, but this is so clearly focused on infrastructure and defense spend. Does it dilute the mandate that a lot of these, renovation and residential construction startups have been working for the last, cycle or two?
I honestly don't know. We will have to see what exactly the details of the infrastructure SPV will entail. So far, it's more of a headline and like a placeholder that they have advertised for the decision. But we'll have to see actually what's in the details in there to make that judgment. Let's say for a second it was only infrastructure, and no, we're not going to touch the housing with that money, etc. Then I would say I wouldn't say taking away, but it would certainly take attention and manpower to the infrastructure side. I don't think it would necessarily change the demand for the renovation of existing buildings or the creation of new living space, because that's just an underserved, and there's a ton of demand overhang, as you know. Also in the US, I mean, the US is also building too few buildings actually for the amount of building living space that it needs. All of the countries in the West suffer from the same thing. But on the supply side, it might then shift a lot of attention over there. So that would obviously be something to monitor. But right now, we don't know what's in the SPV.
And do we know what's the timeline? I've heard somewhere 10 years, that this money will be deployed over 10 years.
Correct. That's the idea. So the 500 billion would be deployed over a period of 10 years. But you can obviously set up new SPVs quicker if you have the right majorities.
Mm-hmm. Yes. Okay. So question for both of you. What's your current allocation of your portfolio in Germany? If you can say that.
I have... No, I have to count. It's either 3 or 4 portfolio companies in Germany. We're relatively balanced. We're not overweight Germany. We're not underweight. We're relatively balanced. Actually, in Europe, France is my bigger market.
We're still awaiting the first, but it's we're excited to support. So if you have any, send them my way.
Mm-hmm. Okay. So maybe JP, this one will be more for you, but obviously, Patrick, you've got Adam overseas, over the pond, who can say what venture folks in construction tech are saying there about any potential funds perhaps coming to Europe, or that's too early to say?
I think there's interest in the geography. I can't say at this point that there are funds looking to set up shop directly in Europe. But I mean, Martin, you point to a broader topic that I think is pretty interesting. And again, I'll speak to what I know. Mm-hmm. I think the next 4 years are going to be chaotic stateside. With the chaos stateside occurring, like, there will be opportunity for innovation. But I think more importantly is, like, there's been a really strong or a really good tie between the capital ecosystem stateside and within Europe. What I'm hoping this kind of mandate or this stimulus does over the next political cycle is it drives a significant amount of innovation in Germany, so that on the other side of the US administration cycle, like, hopefully these countries come back to the table friendly again and say, look, we're all the better for the amount of investment that's gone into each of our respective countries. Let's hug and make up. But in terms of VCs coming over to Europe, I mean, the recent headlines were, wasn't it Andreessen Horowitz just closed their London office, or Index just closed their London office? I think more frequently we're seeing the big blue chips kind of pull out of Europe at the moment and kind of England retreat stateside. But we're here for the long haul, or at least I'm here for the long haul. And it's nice to have folks like Fundamental alongside with us.
I mean, it's always harmful when you follow like very trendy short-term shifts. I'm with you, JP. I think, if you truly want to develop an ecosystem and have an unfair advantage in terms of access, in terms of understanding the market, making the right picks, etc., you'll have to commit to a market long-term. Otherwise, it will never work out. Actually, I'm not sure about the VC side, Martin, because VC in a way is a trickle down of capital allocation from more above. So let's rather talk about what are the big capital allocators doing. Here, I don't have any broad-based insight. All I have is anecdotes. But one anecdote that I find instructive in this very moment is actually I have an institutional LP. They're also invested with some of the world's best PE funds and with Fundamental. So grateful for that. EQT, KKR, etc. And so that person is having conversations that they are also then, when I ask, hey, how is, for example, capital flow and sentiment right now? I spoke with them 8-9 days ago, maybe 10, something like that. And I asked them exactly the question that you asked me, but not for VCs, more for general capital allocation. He said, hey, most funds want to go overweight Europe, and these funds actually expect more capital to go into Europe than the other way around currently. And so that could, of course, have a trickle-down effect.
When was it, more or less?
8-9 days ago. It was after the election.
Okay.
After the election. Yeah, right after the election. So it could trickle down to other parts. However, on the other side, something we said earlier, they also have expectations. They have the expectation that Germany would debureaucratize and then actually make it easy to do business here, create exit liquidities, etc. So that's something that the German government will still have to prove. This is only the start.
Okay. So what about founders? I think a few weeks ago, I can't remember his name, but Patrick, your venture friend on LinkedIn had an article that after the election, actually, there'll be more founders coming back to Europe than going to the US. Do you recall that?
Who wrote that?
One of your friends. I can't remember. You introduced us to him. Okay, so what is there a case right now, or how are you thinking about like founders moving perhaps to Europe or wanting to set up startups in Europe?
Well, I think one of the
I'm talking
the
maybe
things that-
US from US to
US to Europe. Yeah, I can speak a little bit anecdotally to just what I've heard from my own network. There are folks of my generation, call it plus or minus 2 years around my age, that are starting to think about what opportunities do the European educational institutions offer them, particularly as they start getting to like secondary degrees and PhDs and what have you. And I'm sitting in Switzerland, 15 minutes away from ETH and an hour and a half away from EPFL. Europe does not lack for top-notch research institutions, and we're starting to see, at least from the very small microcosm that I'm sitting in Switzerland, a really significant velocity of pretty impressive tech coming out of these schools. So when I look at my peers who are still kind of on that academic trajectory and on an academic path, just in the last 12 months alone, I've had 2 of my friends consider PhD offers from the 2 Swiss universities and a couple up in Belgium. So take it for what it's worth. It's a small sample size, but I think there is a really strong, at least foundational innovation culture, and that really starts with the universities and bleeds into hopefully the German economy and German ecosystem.
Mm-hmm.
Martin, as you know, I get my information from Reddit, and so there's the nice subreddit called Amerixit, where people actually post their plans in order to.
I mean, I'm a data point, right?
Yeah.
But you did it when it was unsexy. So no, look, I wouldn't know. I think that if I recall correctly, that person that you're referring to was arguing from a scientific side and people in the science community, if I recall correctly, also perhaps having interest in exploring that. When it comes to the founder's side, I'm not qualified to say. I also don't have any data points to that right now. I could make whatever logic based with assumptions, hopes, etc. Let me not go there. But let me say one thing, Martin. The other way around, right? So 10 years ago, 15 years ago, European founders in the early stages, including B rounds and C rounds, for them, it was very desirable to actually, at that stage of their business, move to the United States. Why? Valuation shopping. Also, talent. Not the case anymore. It's just not the case anymore. You're getting the exact same valuations if you're a good company over here. The shit companies get better valuations in the US than the shit companies in Europe. But okay, that's someone else's problem. The great companies get the exact same, if not sometimes even better valuations. And the cost of talent, there's a structural advantage in Europe for the same level of talent, and even more for the let's say good but not great talent. So actually, I know I'm not answering your question, Martin, but I'm just taking the other perspective. So are people coming to Europe? I don't know yet. Are people leaving Europe for the US? In my opinion, that is not happening as much as it used to.
Okay. So before we started chatting, I think both of you made a comment about dollar euro exchange rate, that we will see euro going up, dollar going down. So there's a little bit of a bearish bias on the US side. So not asking about politics at all, but what makes you feel this way? That I believe, maybe I'll stop there. What makes you feel this way?
So, I mean, I'll speak to the American perspective. I think there's just a bit of a phenomenon of, retreating within the country at the moment. Maybe retreating is too hard of a word, but the term I heard recently in one of the major media outlets was Fortress America, which is not overly promising. And you think about kind of the ramifications of what that means. That essentially means the U.S. is trying to build infrastructure that is entirely reliant on itself, at least for the next 4 years. And depending on the extent of the quote unquote damage that occurs, without getting too deep into politics, because, this isn't the forum for it. There are a lot of relational ties that are going to be stressed and strained over the next 4 years. And I mean, we saw it alone in the last 48 hours with reciprocal tariffs occurring both in Canada and Mexico. And within 24 hours of those tariffs being announced, they were put on pause. And so, one has to think, what is the actual outcome that we're driving toward here? And as the U.S. if the U.S., I should say, continues to retreat within, again, not to use overly aggressive jargon, and we stop relying on, some pretty long held relationships that we've had since the Second World War, like it will strain the economy. Like we're going to have to figure out how to bring the price of eggs down 50%, because in the last 48 hours they've gone up 49 or 41%. We do what I think every time a car gets manufactured or it gets sold in the United States, like parts are shipped back and forth across the Canadian border at least 5 times. So you can imagine a 25% tariff on every single shipment is just. I saw a statistic today actually that an $80,000 Ford pickup truck overnight is now $100,000. Just because of the amount of the supply chain interaction that occurs between the U.S. and the Canadian, between the U.S. and the Canadians. And so you got to imagine what piece of the country is going to be most impacted by that. It's going to be the Midwest. That's where they live and breathe off their auto and manufacturing economy. It's like, so I don't know which way it's going to go at this point, but I think if the U.S. continues to again look inward and disregard the relationships we've had for a while, the dollar is going to continue to go down, at least in my opinion.
Got it. So you're basically talking about uncertainty and change, which markets will not like, and the capital will not like, perhaps, and they will find somewhere else its place. For example, Germany.
Let's see. That'd be great.
Japan is a great market too. I'm actively looking into Japan, by the way. So that's. But Martin, here's a slightly different perspective to your question. And JP, I don't know if this. I'm actually curious if this resonates with you. So. I've thought for a long time that the soft power that the United States was demonstrating in the world, the way I was brought up, right? And I've been very positively influenced by all of that, has been due to 3 things. 1, military might, also on the seas, by the way, which the US, unfortunately, it has way too small a navy and way too small a merchant navy to truly project power the way it did. Different topic, but military might. 2, culture. One of the main exports of the United States is culture. Dude, the amount of the power that you have through something like Hollywood as well as the music industry is absolutely amazing. That projected a lot of, it projected desire onto other cultures and countries to be American, to be more American, to come to America, to live the American life. So that's true. And look, I mean, we're conversing in English. I mean, I try to sound American with my accent. Obviously, I'm failing poorly, but like that's what happens, right? And then The third one is the US dollar as the world reserve currency. You know what happens to all these three things when you try to build Fortress America? From an economist perspective, I would imagine, I don't know, that number one, we briefly mentioned it, but the military spending perhaps is not going up the next time, and people can think of it what they want, and military, and we want peace, and healthcare is also nice, etc. Sure, but you are losing power projection, right? Two, the culture. I mean, right now it's not looking like many countries want to be friends with each other around the globe, right? So we're getting more adversity around the globe. We're getting multipolar worlds, the way that some world leaders desire it. And so with that, the power projection from culture perhaps changes too. Who knows, right? And three, the world reserve currency. Hey, if you build an administration which at any point in time could be suspicious of influencing its Fed more than it should, maybe I'm not going to buy as much US dollar anymore. Maybe I'm not going to buy as much US bonds or other assets that are being denominated in US dollars anymore. And all of a sudden, if the demand for US dollar falls, you know what happens? Exactly. And so not only is your currency now in a different state, but actually the power projection that you can have, if that happens from the world reserve currency, also changes. It's not being talked about in too many circles except economic circles, but it's a very, very interesting perspective in my opinion.
Mm-hmm. Any disagreement, JP, on this one?
No, I fully disagree. I fully disagree. Fully agree.
Also, that will be a short.
That would be a short slip, maybe. No, it's interesting. I don't know if either of you follow Scott Galloway at all, but he says something interesting where the U.S. historically has been the place to go and earn money, and Europe has been the place to go and spend money. Mm-hmm. I think we're starting to potentially see a paradigm shift here. I don't know how quickly it's going to occur, but if other countries in Europe follow suit behind Germany, then that power dynamic I think is potentially at risk.
Very interesting. Patrick, you said Japanese, you're looking at Japanese market, construction tech startups?
Oh, yeah. Oh. I mean, look, the problem with Japan is that not only is it geographically an island, it is economically an island. It's one of the most protectionist countries in the world, and it's very, very difficult to break into, and that's also in construction tech, right? And so we've been trying over the years, my partner Shub, who leads Asia for us, etc. One of the most exciting construction tech software companies of the world is actually AntPad out of Japan. Now, will you hear anyone talk about it? No, because they talk to Japanese customers and to Japanese investors. So that's something we're trying to break a little bit because the market actually has interesting dynamics.
Mm-hmm. Okay. Are you looking at any specific? I just pulled up the chart because I was in the preparation of this chat. I looked up German GDP, and there was a Japanese next to it. So is it orange or whatever? The orange one is Japanese GDP. So it's been on the downside from 2012, probably from 6 trillion to 4. So that is quite a lot, right? So you
didn't expect that, right?
Yeah, I didn't expect that. So are you looking at any particular like types of startups, or what's
right now? I think it's more important for Western investors like JP and myself to even get a good handle on Japan. I think Japan for us is the one market where I would say, dude, I have no clue. I have more clue of the Chinese market than I have of the Japanese of the Japanese one. So right now it's basically, hey, let's find a way to actually do business over there and be great partners. So I cannot answer your question here.
That's fine. That's okay.
Patrick, we actually have a mutual friend who shared a fascinating stat with me about construction activity in Japan. So I think call it a stereotype generalization in the U.S. is that construction work typically runs about 15 to 25% over budget, pretty much always. This person who is also a prop tech venture investor mentioned that in Japan, they're running single digits, if not hitting budget spot on, pretty much 80 to 85% of the time, which is, if you think about that, it just unlocks an entirely different problem set that Japanese builders need to think about. It's no longer about, where you're getting your materials from, how effectively you're executing on the build. It's almost a luxury to start introducing technology into your building ecosystem. like similar to you, we don't have a whole lot of visibility into Japan, but it's a market we'd love to be able to support.
And if it's the person that I think you're meaning, that person has a lot of Japanese LPs.
That's exactly right.
Yeah.
Okay. All right, guys. Any closing thoughts on this subject as we are heading towards the time?
I just find the top Google rated question that you have here on the screen is, why is Germany's GDP so high? That is a really interesting question to
Future
ask.
strong manufacturing sector, focus on export and innovative culture. Is that true?
Probably true, yeah. Might not be innovative in the Silicon Valley sense, but it's very innovative in the engineering sense, I would argue.
Very good. Okay, JP, Patrick, thank you very much. And speak to you
Thanks,
soon.
JP. Thanks for coming on.
Thank you guys. Thanks, Patrick. Thanks, Martin.
Thank you.